Let's get some more analysis and thoughts on the outlook of the Australian property market. Mark Bouris from Yellow Brick Road joins us now from our Sydney CBD studio. Mr. Bouris, look, thanks very much for your time today. Any surprise to see, I suppose, a little bit of a creep up in house prices off the back of that November cut?
Not really. That's what the market was expecting. So, I mean, I guess the sentiment changes pretty quickly when you know interest rates actually aren't going up. That's a big deal. The fact that we've only had 2 rate reductions doesn't necessarily indicate that houses will become more affordable. But what it tells the people out there in the market who are ready to buy is that now's the time to buy, because house prices will become more affordable going forward. And
would you expect that to continue? Obviously, we had the December cut. Expectations are for February and March we could also see consecutive cuts.
Yeah, the market's certainly telling us that February, March, April we should see more rate reductions given where we are today. I mean, things change, of course, over the next 2 months. But if there are going to be rate reductions next year, housing is going to become more affordable. So the RBA is very, very conscious of that asset class, house prices, and the confidence that it pushes right through the system. Interestingly enough, I saw something come out yesterday about the increase in bankruptcy and the increase in arrears and the arrears in terms of mortgages in Australia at the moment. And that tells me that the RBA rate reductions were perfectly timed in terms of where the market is and momentum going forward. So, well timed. I would expect to see more rate reductions come February, March next year, given what we are seeing right now, today.
Well, I was going to ask, I mean, will they be justified if they do cut again in February and March? I mean, it's something you'd like to see, I assume?
Yeah, well, I'd like to see it in terms of just shoring up the property market and shoring up the mortgage market and the quality and the strength of what our mortgage book looks like generally across the board for the country. So that's very important. But really the indicator is going to be what the Australian Bureau of Statistics prints, I think it's the 28th of January, something like that, for the December quarter. So if the inflation numbers come out right in January, late January, when the ABS prints, you know, they come within the RBA's range, that's for the RBA. If they come within the range, everything else looks like it's indicating to us that that's going to be the case. You would expect to see a rate reduction, therefore it is justified based on the data. Data, that was always 3 months behind or 6 months behind. That doesn't necessarily indicate what's going to happen in the short term, but it's the best indicator the Reserve Bank can get their hands on. And also, obviously, all the anecdotal stuff that's going on overseas, the lack of liquidity going on overseas, just less funds to lend to the Australian market. You would expect to see rate reductions and enter in a rate reduction period. We very rarely see one rate reduction or 2. We usually see 3 to 5. I'm expecting to see 5 rate reductions. If I had to, I expect to see 3 more next year.
What's your take on the general Australian housing market at the moment? You get some who suggest, you know, things are going along pretty well, a little bit subdued, but expectations for a renewed sort of recovery. But there are others whose voice is, I suppose, becoming louder, suggesting, look, it's a bubble that's about to burst, and in 2012 we could see a big plummet, if you like, in house prices.
I don't accept that proposition. That's the Harry Dent argument. That's the economist argument. That's something that Moody's printed not so long ago based off the same data that Harry Dent sort of promotes around the world. I mean, housing could come off. I mean, it is coming off in certain segments. I mean, if you look at the Australian market generally, if you look at the income to price ratio, we are at 4.5 times. And the Reserve Bank printed this in September in their financial stability report. They take the view that the ratio is right in the sweet spot in Australia at the moment. Now, that is an average. That's a national average based on national prices and national income. Then you go and look at a place like the Gold Coast, for argument's sake. The incomes there are not keeping pace with the property prices, or have not been. So the ratio in that territory is out of whack. So that's going to restabilise. But overall, we're going to be okay. But so you're going to find places like, and you saw it in the RP data, Rismark report, places like Orange are inordinately affected probably because people were rushed there to buy houses in that regional district sometime over the last 2 years, paid too much, were able to borrow a lot of money. Now that's starting to restructure because the income to price ratio is out of whack. Overall, happy. There are going to be pockets throughout Australia that need to adjust, and some of those adjustments could be off 30–40%, but not in places like Sydney, Melbourne, Brisbane. You're going to get minor adjustments, 5%, somewhere between 0 and 5%, or, as the data indicated for November, a price rise at 0.1. Modest, but still a price rise nonetheless.
If we get 2 more, even as you are expecting 3 more interest rate cuts, and we start to see that again fuel more interest in people buying homes right around Australia, what about for companies like Yellow Brick Road and meeting that demand? I mean, there's a lot being spoken about funding constraints at the moment. I mean, you mentioned the liquidity issues, particularly offshore. I mean, how are you placed to be able to access funding to meet that growing demand?
Well, we access a particular credit union's balance sheet, which is very, very healthy at the moment. You see, one of the things that's happening in this country at the moment, and the previous talker was talking to this, a lot of Australians are investing in fixed income. So they're moving the money out, the liquidity's coming out of the equity markets, going straight into the banks and credit unions who are paying and have been paying pretty good interest rates on deposits. That money now has to find a home, because on a balance sheet of a credit union or a bank, that's actually liability. That liability has to be matched with an asset equals, in credit union terms, a mortgage. So we are filling the void that particular credit union has in terms of gathering assets to match up with the liabilities that has been very successful getting over the last 12 months. That money flowing out of equity markets. So we have no issue right now in terms of liquidity. The liquidity crisis that I'm talking about is the refinancing that the big banks have got to do in terms of their off-balance sheet funding for their assets. So the assets they've gone out and lent on. So the liquidity, which generally speaking is that they borrow this money from overseas, it comes out of the US and or Europe. Europe is going to be very difficult next year. So in terms of Yellow Brick Road, we don't have an issue. But if you've got a portfolio of $500 billion worth of mortgages on your balance sheet and 40% of that's funded off balance sheet, in other words, through the commercial paper markets or however it is, that is going to be difficult.
Mark, just finally on a slightly different, I suppose, note, obviously, Celebrity Apprentice, a big year this year, under incredible pressure from many of my colleagues here at the Sky Newsroom. Wanted to know next year, obviously we've seen the promos, any insight as to who will be vying for that coveted position of your apprentice?
Well, I actually start filming again on the 15th of January, which is only a couple of weeks away. We hope to be on in the first quarter of 2012. I will look. The Sydney Confidential actually has had some pretty good and they're pretty close to the mark in terms of who they're predicting. So I'm not going to say it, but you can go back to Sydney Confidential in the Daily Telegraph. They've actually thrown a few names up there which are fairly close to the mark. I will say one thing is we got an international star, which will make a big difference to the show, and we've got some brilliant Australian celebrities, whatever that means, a celebrity. But we've got some brilliant characters, and the game for us is matching them all up against each other. So whilst we got character A, we need to match that particular individual with character B. So it's been a real process. Everyone's bedded down. It's all done, all signed, ready to go. The deal's in the can. We're just going to start filming. We have 5 weeks of intense filming from the 15th of January right through to the end of February, and I reckon we're going to have a really good show coming up.
Oh, great stuff. Look, got to leave it there. Mark Bouris, Happy New Year. Thanks for your time today.
Thanks very much, and all the best to you guys.